What is a multifamily real estate investor? Well, welcome to my podcast, Seeking Wisdom Through Real Estate, where we dig deeper into truly understanding and gaining knowledge from experienced and educated people. I am your host, Leah Massey, a real estate agent who is trying to educate myself more and take you along for the ride. Every week, we will be bringing you information to help you unlock the understanding in real estate. So join me today with my guest, Dan Costatino.
Hi,
Hi,
nice to meet you.
nice to meet you too. Chief.
Lots of
Yeah,
achieves.
Chief. Achieve Real Renovations LLC and GNC Realty Services LLC and PGH Home Buyers LLC. And he has been on multiple podcasts and news channels. So welcome.
Thank you very much. Thanks for having me.
Nice to have you. Now, Dan, who are you? Who is Dan Costatino?
Well, I always think of myself as like a city kid that just kept fighting to, make something of his own life, right? Grew up in the north side of Pittsburgh and really, you know, never felt like I belonged, right? So I always looked for ways to um, make my life better, a little different than when I grew up. Didn't have a bad life, you know what I mean, by any stretch, but always felt like I wanted to make more. So, um, had a good career in logistics and sales for about 13 to 15 years. And, well, to be honest, I became a cocky salesperson and I always wanted to make more money. And they messed with our commissions a little bit. And I just said, I'm gonna show them, right? So I said, I'm gonna try something else, make some side hustle money,
Uh-huh.
and make something better in my life. Get out of the rat race, and that's when I started looking at different things. I tried stocks and options for a couple years, and I'm not good at that. I'm too emotional. So I looked into real estate. First listened to Rich Dad Poor Dad, and it really broke my mind because it talked about owning assets. It just talked about things and money differently than I had ever heard before. No one I ever grew up around talked about money the way that book did. So I looked into real estate and it was a tangible asset. I could drive to it, touch it, and it felt more real to me than trading options and stocks. So I went down that path and bought a foreclosure, and the rest is history.
Yeah, okay. And I did read when I seen some of I did catch a couple of the podcasts. I looked at some of them, and I did hear your story. And it spoke to me when you had said about when you were raised in the inner city and you didn't kind of hear any of that until you went to college, and until you got into, till you read the book and you went to a conference. I think at what was it, the Civic
The
Arena?
old Civic Arena, yeah.
Yes. And so, and that's the story of, a lot of people, I guess, that they're around situations where they don't hear of something like better or something that they can make money at and do things. So, what about that experience changed you?
Well, I mean, my mom was a bartender. My dad was a
Yeah.
factory worker. I worked with my dad in college.
Mm-hmm.
He was afraid to let me work there because he didn't want me to stay there because a lot
Right.
of kids would work in the factory and it was pretty good money at the time. And he was afraid that I would quit college and stick in the factory.
Mm-hmm.
Uh, that conference, I've never heard people talk like that. Like my
Mm-hmm.
parents didn't even talk about getting promoted,
Mm-hmm.
and nothing against them.
Yeah.
Um, the thing we always had, and I always say my biggest advantage was I had parents that I always knew loved me, right?
Right.
There was that support that, money can't really buy. Um, but just hearing what other people did and the belief that they had, uh, I don't know, it just made me want more. I don't know how to explain it,
Mm-hmm.
but I always underestimated myself. And whenever I saw someone, I would kind of, target them in a positive way, right? I
Mm-hmm.
would try to compete
Yeah.
with them. And I always ended up succeeding, right?
Mm-hmm.
And that's why I have like my taglines, no finish line, because I just don't know what my cap is yet, right?
Mm-hmm.
And hearing some people talk like that just really motivated me to want to try to push myself. Um, and challenge myself, because sometimes you get in the mindset of setting goals that you can meet instead of setting goals that you're not sure if you can meet. And you know, that failure you can't be afraid of. And listening to those people help you get comfortable trying things that you might fail at, right?
Right.
It's okay to not succeed at something, because you always learn a lesson. But again, I just heard words said that were not said in my schools or in my family.
Now, was your logistics job that you had for what, 19 years or something like that, or
Yeah,
16?
yeah. I mean, I worked for a long time, but yeah,
Okay.
logistics about 16 years.
Now, was that because now you're into real estate.
Yeah.
So was that the stepping stone, you think, to get you to where actually the passion is, that got you to where you're at now? Or did that mindset, when you heard something new, did it start from working in logistics first?
Yeah, I mean, the logistics was a game changer for me, because
Yeah.
um, everything in this room, everything that you buy from Amazon, it's all logistics, right?
Mhm.
Everything runs through trucking. Like, nothing gets to your house without trucks. I got to learn so much about business because I had to call on UPMC, I had to call on every company you can think of. I would have to go meet with them and learn about their business. I didn't just say, hey, ship with us, we have trucks, right? I had to learn about their business and see how our trucks could serve them. With that said, that was the first time I ever worked in a corporate environment. So I did have very good mentors. Actually, one of my first bosses, who challenged me right out of the gate when I graduated, I was getting a company car. I mean, I can't tell you how, like, I was floating on air, right? You know, so I had a company car, thought I was, you know, hot stuff for a little bit. The company car they gave me didn't have air conditioning. Well, like, you know, I'm from the city. Like, I had one suit, like, it was wool, and it was June. We had just graduated, and it was hot. And this guy comes in. He was my boss. He goes, "What are you doing?" I said, "Well, I'm prospecting. You know, doing some computer work, helping out the other sales reps." He's like, "You're full time now. Go out and make some calls." I said, "I don't have a car with air conditioning. I'll die out there."
Yeah.
And he goes, "Go make 20 calls." And like, you know, I was driven by a little bit of fear through college, and obviously with my new job. So I went out, I hit the streets. He said, "Go make 20 calls." Went out, made 20 calls. He's like, "Did you get anything?" I was like, he's like, "How many calls you get?" I think I got like 17 or 18 the first day. Anyway, I did this for 2 weeks. The car finally came back fixed with air conditioning, because I was riding around my Honda Civic hatchback with big subwoofers in the back and everything else. And when I got the car with air conditioning, he goes, "I just want to see what you were made of." You know, and he challenged me, right? And he challenged me throughout that first 5 years. And then I went to another company, ran my own station. I got the opportunity to run my own station. So I was in sales, and I ran an office, and did well with it. So was it a stepping stone? Yes, I didn't know it was a stepping stone. At that point, I'd never dreamed of owning one rental property. I just wanted to be, you know, make a lot of money in sales at that point. So it took me a long time to say, I really want to change the trajectory, you know, of my family's life.
And when you had started, you started what, in 2013 with your first rental property? Was it?
First flip, yeah,
Flip,
yeah. We
okay.
bought a foreclosure, and yeah, we flipped that one. I mean, we did pretty well. I think I closed to close, it was 91 days. It was a pretty cool experience.
So what led you to doing that? So you were working in sales, you were doing pretty well. So what led you to pick up a flip?
Again, you know, as a salesperson, when they change your commission, like it's a challenge, and you're like, "I'll show you," right? So that was where it came from. It's you know, I think back, it's probably a little childish. I could have put that energy into just doing better at my job, but that was where I was at. And again, I was starting to listen to those, or read or listen to those books, seeing other people do it. I'm like, I want to try that, right? And you know, I didn't just buy a house on the MLS, right? Like, I had studied and prepared myself to do it. But like, I'm a man of action. I think, you know, I've seen so many people throughout the last 12 years pay lots of money to learn about real estate, and they never bought a property, and they missed probably the best decade, you know, that they could have had a lot of success and changed their family's future if they had just taken action. So I am an action taker.
Yeah. And I seen you have your book, Keys to the Vault,
Yes.
which is an excellent book. Actually, your wife had given me the book to read. I work with her, and it was a nice read. And actually, it's very motivating. You actually give a lot. I mean, a lot of people hold back, but it didn't seem like you held back too much. It seemed like you really were invested in helping others achieve what you achieved, giving away a lot of your secrets, which is nice. And when you were just talked, the reason I opened this book because you had talked about starting the flip. And I think a lot of times people, because even with this podcast or whatever, people have, you get nervous to make the jump. And you talked about mental blocks and different things like that, and not knowing our full potential. So can you talk a little bit about, or feeling intimidated? How did you actually start it? Like, how did you make that start? Because that's a lot. Like, where did you start? How did you get the money? How did you you read and studied stuff, but how did you make that actual leap?
I think the most important thing is to surround yourself with people that are doing it.
Okay.
Right. So I had bought some education. I was just in rooms with people that were doing it. And when you do that, you will find that they're not that much different than you, right?
Mm-hmm.
I've been in rooms with people at the time, like they had $10 million businesses. And I was like, man, I'll never do that. I said, but maybe I can get to $1 million or something like that. And we were just a hair shy of 10 million last year. But you got to put yourself around the people that are doing it, because it'll give you more confidence and you'll learn stuff and that you just never will on your own. You can learn a lot more now with YouTube and reading books than I think even 12 years ago. But you got to put yourself in those rooms. With all that said, like, I almost walked out on that first deal. I almost never took that step because I did get cold feet at the end. There was a crack in the garage wall, and it scared me. Mm-hmm. And I almost walked away from $5,000. And who knows, if I would have walked away, I might have never tried real estate again. Right. But I went through with it, and we made 27 grand on our first flip, and that was pretty inspiring.
Yeah.
To keep going.
That's very encouraging for people. I know when I was, like I said, I was listening to some of your podcasts and listening to some of the podcasts you were on, and then reading your book. And I just had a question. I think for me too, even when you start, I think you mentioned you weren't too handy, right? And so that's another thing too. It's like, and I know you said put yourself in rooms. Is that where you found people that could do the work?
Oh, absolutely.
Okay.
Yeah. I have a saying that if you have to do the work yourself to make the deal pencil out, it's not an investment, it's a job. You bought a job. Mm-hmm. Like, if you can't buy a flip or buy a rental and hire people to do stuff, it's really not an investment. Like, you just bought yourself a job. And I think that's an important mental shift, because you mentioned that I'm a hard money lender. Mm-hmm. I lend to a lot of contractors that want to get in the real estate game. They can't even make the deal work unless they don't pay themselves. Mm-hmm. That's not an investment. Like, you could have just made more money. Right. But really, it all comes back to, you have to buy a deal right on the front end. You have to buy it low enough to be able to fix it up and pay people to do it. But yes, back to your original question, those rooms help you learn where the good contractors are and who to stay away from. Referrals are everything. I still operate a lot off of referrals. Mm-hmm. Because everyone says they do a good job. Everyone thinks they do a good job. So it's very important to build your network, and that will give you a lot of shortcuts in life.
Okay. And then you had said too, you had started, because you had done the flips, the rentals, and then renovations and everything. So, and I know you also in your book, and you had mentioned about kind of knowing what your niche is and kind of knowing where to start. Did you know that up front, or like some people, speak to those who really don't know?
Yeah.
How,
Well, let me first say, I started out just wanting to flip. I wanted to flip 2 houses a year, right? Mm-hmm. But then I learned how to wholesale. I learned rentals. I learned a little bit of lending with self-directed IRAs, and I did everything. I call my first 5 years like my side hustle phase, and I tried everything because it was fun. Like, you're in sales, you love to close deals, you love to make money. And making money different ways is very cool.
Mm-hmm.
And there's a lot of lessons that come from that. But it took me 5 years to get to 30 units, which is amazing in itself.
Mm-hmm.
But, it took me another 3 years to get over 600 units.
Mm-hmm.
Like it was that focus where I said, now it took me 2 years to really study what multifamily, like how to get these big communities. But I studied 2 years, and we went from, in 2021, we went over 100 units and then over 400 units by all in that 1 year.
Mm-hmm.
So that's why I preach focus. But you have to try different things when you first get into it. I think you go into it with a little direction.
Right.
I always say there's a fine line between opportunity and distraction, but you got to learn what you're good at, right? You got to learn what makes you feel good, what makes you feel purposeful, right? Like now, I love to say that we create communities that people live in. We have like 1,000 people that live with us. It's a pretty amazing experience, but there's a fine line. I think when you first start out, you got to try different things, but as quickly as you can, find a focus and make money that way.
Okay.
Because if you spread yourself too thin, you will never take off with the growth that you really want to change your life, in my opinion.
Can you give some tips for those who might not still know if it's their passion or focus, like with some of the feelings or some of the things that's going on that you should know, okay, this is probably what I should focus in on?
So I think ultimately I wake up and I want to hit it. You know what I mean? Like we just exited 152 units last week. It was over a $10 million sale. At 3 a.m., my eyes were wide open. Like I couldn't sleep. And usually that's because of some stress. And I've had a lot of stressful months and heck, a couple years of stress. I was so excited because it had hit me what we have accomplished, and it took 4 years to do. You've got to feel good about what you're doing, because there's a lot of people that I talk to in real estate that hate dealing with tenants. Like, don't own rentals.
Yeah.
I mean, everyone says, oh, that's the way to passive income. Rentals are not passive, by the way. Flipping, if you don't like the renovation game and dealing with contractors, like, you've got to feel good about what you're doing. You got to love the end product. I just love the game. I love real estate. And now, everything, it will evolve. Like, you're going to do stuff. You're going to maybe get bored and try something else. Eventually, you have to find what your focus is, but it will reveal itself. I don't know how to explain it. It doesn't want to feel like a job. Just go get a job if you don't like real estate. But some people have different passions, right? Some people love accounting. That's not my deal. I don't know. What do you think? You like real estate? It's a good thought. I can't imagine doing anything else. I remember being in logistics and be like, this is stupid. Like, I'll go in here, they'll give me freight, and tomorrow someone will walk in with a pizza and they'll give their freight to that person instead. Like, that did not feel rewarding to me.
Right.
We all have been in jobs where it's been that, right? So I love really almost everything about real estate. There's certain aspects I don't like, but I just love it so much. So it's hard for me to kind of think from other people's perspectives. I know some people are so detail oriented, they will never take action because they're looking for everything to be perfect. The opportunity really lies in seeing where the opportunity is when other people can't see that, right? It's sometimes tough for me to go into a property. Even today, I've spent probably over $8 million in renovations at this point. It's still tough for me sometimes to see how beautiful the place is going to be, and really until the flooring goes in. When the flooring goes in, it changes everything for me. But sometimes I'm like, man, I'm not sure what this is going to look like, right? So it's different for everyone, but at the end of the day, you've got to really enjoy getting up and getting after it.
And I guess the reason I ask that, because I know personally I deal with that sometimes too. I think in real estate, it's like, oh, find your niche, like find out where you want to go. And there's so much in real estate where you
almost
don't know.
Many ways.
Yeah, and it's like, well, how do I know which way is the way? And I think, and I run across some people who feel that too. They don't know what area, but everybody says you got to be in a particular area. You got to stay in a particular area.
I've seen evolutions that have played out very well, right? At the end of the day, you need money. I don't care what anyone says. It's passion, but you need money. Real estate is expensive. I know people with $100,000 in the bank. If they go below that and they're doing multiple projects, they will run out of cash,
Yeah.
right? That's a lot of money to anybody, $100,000 in the bank. But I'm telling you, if you do 3 projects at a time or 4 projects at a time, like that money can go, in months. So you need money at the end of the day. A good evolution that I've seen is wholesaling, because you get to, or being a realtor, is a great way to go look at a lot of properties. Now, you're going to waste a lot of time too, right?
Yeah.
With people that are not going to act. You might present the best opportunity in the world to them, and they won't act. And you're going to think, what did I do wrong? It's not you. It's just they're caught up in their own thing.
Right.
But wholesaling's a great way to analyze deals, put together some basic renovation costs, present that deal, and the market gives you feedback. Did you present a good deal or not, right?
Yeah.
And then flipping, obviously, you can kind of bypass that. But wholesalers get really good at finding off-market deals when most realtors, I think I speak about that in my book,
You do.
most realtors are so hung up in, I have to get my seller the most money for their property. I've bought all of my deals from people that had to sell,
Yeah.
right? They don't care about getting the top dollar. They care about getting this burden off them.
Right.
Realtors will literally shoot themselves in the foot. They could have bought a great deal themselves. Instead, they're like, I have to get you the most on the market. And then it sits too long, and that person's in stress every day,
Well, you
right?
talked in your book a lot about knowing their story, knowing the reason behind why they're
Yeah.
trying, and that would help you kind of. Yeah.
And heck, I've even sold stuff
Yeah.
cheaper than I could have, because it just was a distraction to me. Like, I had a multifamily in Neville Island. I just didn't want to do it, right? The borough building was giving me some flack on the zoning. It was like 5 units. They said it's single family because Anyway, I'm like, I don't want to deal with this.
Yeah.
So like, I took a little loss on it. I don't care, because, and someone else profited off that, right?
Yeah.
It wasn't necessarily distress. Sometimes people with a lot of money just don't care about, 5 or 10 grand on,
Right.
and it's hard for people that are trying to make their way in the world and trying to rise above their station, so to speak, to understand what that motivation is, because they're like, I could never do that. I would never sell something $10,000 under what I could get it for.
Right.
It doesn't matter what you think, right? So you really have to ask a lot of good questions.
Wasn't that too, where when you had said that too, to be successful and make a lot of money, there's a lot of risk. And then you mentioned like debt. Don't be afraid of debt and different things like that. So I think that's kind of foreign to people. Like, oh, I don't want to do that. But actually, that's what a lot of successful people have done, and also failed a couple times too.
Yeah.
Yeah. So can you talk a little bit about?
Well, I was brought up not to have any credit cards, right? And I'm glad that my parents kind of gave me that basis, because I've never had a bad credit score, right? So I think that was good. They were not really financially educated, but they were afraid of debt, and it kept us healthy, right?
Right.
Didn't have a lot of money, but didn't have a lot of bad debt. I didn't have too much of a problem borrowing, especially for, like, I used a home equity line of credit for my first flip. And for most people, they're like, I've talked to investors that had, 18, 20 units. That's a good portfolio. They're like, I would never put up my house on an investment. I'm like, I just don't understand that concept. If you shouldn't buy it if you don't think you're going to make money, right?
Right.
Your worst case really should be break even. So I never felt like I was risking the house, but I guess I kind of was. But at the end of the day, you're seeing stuff. If you're buying something so cheap and you can, once I started learning the BRRRR method, which is the buy, renovate, rent, refinance, repeat. Once I learned that by accident, actually, because I was going to flip a house and it wasn't going to do well in the market. It was just a weird spot in the Southside Slopes. I refied it and got all my money out. I'm like, ooh, that's kind of cool. I have an asset that I paid zero for.
Yeah.
And I did that with borrowing hard money, and then I borrowed bank debt. You just get real used to it, I think, as long as you're doing good deals. The big thing is being educated and make sure you know your numbers. I mean, you can't buy on feeling. You got to buy on data.
Yeah.
So I've just gotten good at underwriting hundreds of deals on the flip side, on the rental side, on the hard money lending side. I'm just better than most. And that's why a lot
Yeah.
of borrowers of mine like dealing with me, because I give them good feedback on listing prices and whether it's a good enough deal or not. I've turned down, I think, close to 200 loans
Oh,
that people have requested from me because I'm like, you shouldn't buy this,
okay.
or one reason or another,
Yeah.
right?
Well, that's good. Yeah, helping them out.
Yeah, but I don't know if I answered your original question, but
Well, no, and I had a question too, real quick, when you said the Burr method in
yeah,
your book, because you wrote your book in 2023. And I know in your book you mentioned about that maybe they're kind of doing away with that little bit way the market is, or it's not as
it's not
it
as easy.
is it
It,
still not is it not as
it's
easy it was before when you wrote this book?
you can do it.
Okay.
You
All right.
can. Interest rates have come down,
Mhm.
but it's not just interest rates. Like the prices have gone crazy, right?
Mhm.
I mean, what um, in Garfield, I bought a house for I think $27,000. It's worth over 300,000 now.
Mhm.
You know, a duplex that I bought for 32,000, one of my first. I just put it up for sale. We had like 6 or 8 offers, like right out of the gate, first weekend.
Mhm.
That's going for 250. So the higher prices on top of the higher interest rates makes it tougher to because we cannot keep getting 10% appreciation every year.
Yeah.
So yes, it will be tougher, but there's always distress out there. I don't care what neighborhood you drive in, $1 million houses, someone has distress because
Right.
we love to spend, right?
Mhm.
So there's distress everywhere. People die every day.
Mhm.
That creates distress. There's out-of-state owners. There's lists you can download. There's distress everywhere. So you can still burr for sure. I mean, we're doing some more complicated deals right now. We're going to own assets without having any money into them.
Okay.
So it's still doable. It's just harder to do
Okay.
than it was, I would say, more than 5 years ago.
Okay. And I know you quickly explained. Can you explain just for our viewers who might not know what that is? Can you
Okay.
explain what it means?
So you buy a property, and you have to buy a property
Mhm.
under market value. There's no question. I'm talking whatever it could be worth, you need to buy it like 30 to 50% of that price.
Okay.
And then you renovate it to improve the value, get it rented out, get a lease on it, so you rent it, and then you refinance. And not all banks will allow you to get all of your money out.
Mhm.
If you actually buy it cash, you actually hurt yourself because they're going to do a loan to cost, and they'll do 70 or 80% loan to cost. So if you have $100,000 into it, they'll give you 80%, 70 to 80%, $70 to $80,000
Mhm.
in a loan.
Okay.
For some reason, this is the game. If you buy it with a hard money loan, if there's a loan on it,
Mhm.
they'll go off of the appraised value.
Oh.
I don't know why that's the bank game. That is a big difference.
Mhm.
So, I kind of chuckle when people say they're afraid of debt and they're like, I'm going to do it with my own cash. Okay, but you're not going to get all your money out. So just understand you are going to cap yourself. You're not going to be able to scale if you leave $20,000 to $50,000 in every deal. Like we build up to 100 units. I had to get all my money out to recycle it, or you just run out of cash.
Okay.
So once you rent it out and refinance, get your lender paid off, you maybe take a profit. Maybe you have to leave $5,000 in a deal. You basically rinse and repeat. That's what the Burr method is.
Oh, okay.
The goal is to get money out, though.
Okay.
Yeah.
And real quick on the money, because I know there's a lot to cover with you, but real quick on the money part, when you started your first investment, you used a HELOC, right?
Yes.
Can you explain that?
Yeah. I didn't know what this was
Uh-huh.
until I went to the Acre event, and one of the bankers from First National Bank was speaking, and he was one of the vendors, and he talked about a home equity line of credit. And I'm like, I don't know what that is. We fortunately had a good amount of our house paid off already. It had appreciated. So I found out that you could borrow, I think up to, at that point, 90% of what your home's value was, as long as your debt to income was okay. So I did. I got a line of credit. I didn't borrow the money. I didn't take the money out, but I got a line of credit up to 90% of what my home's value was at the time. And I'm pretty open with numbers. I mean, it was like a $125,000 line of credit, somewhere around there. It was in the 120s. And my first foreclosure that I bought was $40-some thousand. And all in on that project, I was in for it for, I think, $90,000 or $95,000. So I had money to spare on that, And again, I did put up my house, but it was it was such a, I mean, we sold it for 125 grand. So there was good spread there, right?
Right. Yeah.
So yeah, that's what a home, if you own your home and you have equity, you can tap into that equity, get a line of credit, and literally just write checks out of it.
Okay. Is that what a lot of people do?
I don't think enough people do it. And
Okay.
actually, I used to, be involved with running a mastermind group. And we had, I think, 50 people at the time, and some of them were realtors. They had never done it, and it drove me crazy, but they ended up getting a home equity line of credit and bought some property. But it's the easiest way to, because a lot of people, and this is one of the reasons I wrote my book, I want to show people how to get access to capital. Not everyone's good at raising capital. Not everyone has a track record. It's much easier for me to raise capital than most people starting out that have never done a deal. I wrote this book to show people all the ways that I've raised money in the past 13 years. The home equity line of credit gives you, if you're set up, not everyone has a bunch of equity, right? Yeah. If you're set up, it gives you the option to go get money without having to ask anybody else, right? You got to ask the bank, I guess, right. But it's a little more private, right? Not everyone likes publicly going out, in their Rolodex or their phone and saying, hey, can I borrow?
And you also mentioned too, the banks sometimes won't lend to first-time investors like that, right? Is it kind of hard to get that loan?
Banks don't lend on flips, period.
Yeah.
They sometimes will not lend on rentals, and really, they'll lend on a rental that is already rented out, but they'll give you like 70 or 75% of the value. But you're going to have to put in 20-25%. My whole goal, if you're coming from a place where you need to build your capital or build your wealth, which is where most people are, you've got to create equity. The difference between me building my portfolio and, say, one of the large investors like AR Building or Greystar, they're allocating money. They have hundreds of millions of dollars. They're allocating money as investments. I had to create money to invest. And most people that I know are in that space. You have to create money. So the biggest key point to success is creating equity through hustle, sheer hustle, and negotiating and understanding the numbers. It is a finance play as much as fixing up. That's why a lot of contractors get into trouble, because they're like, I could do everything cheaper, right? But they don't understand the finance part of it. So they screw up a lot. They'll pay too much for a property that needs fully gutted, or they will screw up the exit because they'll price it too high because they had spent a year doing it as a side hustle, because their main contracting work gets priority. So the flip is like a secondary thing. So it takes a long time. Then their holding costs are higher. But yeah, it's as much as fixing up places, it is a finance play. And the whole thing to success is buying low and speed. You want to get them done.
And when you say financing, that's like really knowing money, how money works.
Knowing how money works for sure, but also knowing what the values are.
Okay.
It's very easy for me to lend in Pittsburgh because I pretty much know all the areas, and I can look up the values, right? It's a little more foreign whenever I go outside of the Pittsburgh area. And I have for some operators that I know very well, and I know I'm going to get my money back. But I feel much safer in Pittsburgh because I know the economics. So that's what I mean from the finance play. Yes, it is the capital part, but it's also understanding the values. I think that's even more important.
And that's getting into those rooms around people. That's when you're learning all that stuff. And
yeah, because there's a lot of bad advice out there. A lot of be very careful listening to people on TikTok on an 8-second video.
Sure. And let's get into what you do. The hard money lending. What is that?
Hard money lending is, it has a lot of different definitions, I would say. But basically, we lend on hard assets, right? I lend on real estate deals in first position. So I always say I won't lend on a property I don't want to own, because that's what happens if worst case scenario, you default, the project falters, we take the property back. So we've done over 230 loans. I've had one person default, and we had to take back 3 properties.
So you guys put a lien on the home.
We are the first position lien. We are the bank.
Mm-hmm.
So we will lend up to 100% of the purchase price. Again, you have to buy it under market value.
Mm-hmm.
But we'll fund the whole purchase, and then we'll fund all of the repairs. So both of those numbers have to equal up to 70% of what the after repair value is. So what you can either appraise for or what you can sell it for on the market. So we look at comps and work our way backwards. So if we have someone go on our website, they submit their deal and they put in what the after repair value is, what the purchase price, and what the renovation is. So it's very simple. What I look at the ARV and I just take what their numbers are first and look to see if the purchase price and rehab amount are 70% or less. If they are, good. I'll start the underwriting process. I'll go on the MLS. I have another valuation tool. I'll look at their scope of work to see if it matches what their rehab budget is, because some people say, oh, it's 20 grand. It's really 100,000. So I evaluate all that and then we fund the deal. We can fund the deal the same week. If all the ducks are in a row, I can fund a deal same week. So we're speedy and we'll fund up to 100%. Like a bank will not fund that deal anyway. But they certainly are not going to be able to fund a deal within a week and 100% of the purchase price.
Now I had a question in your book when I was reading. How about someone who is really new? Like, how does that work for showing different things and, showing that they're, like when you said the different things they have to turn in, scope of work and all that. I guess they can still do that when they're new. But when they're new, how does that work? Because they're like, well, I don't have anything. I just want to buy something and I want someone to help fund me.
Yeah, you've got to be, it's risk to give someone money to purchase a property. So yeah, if your guard's already up whenever someone's brand new.
Okay.
But if they don't have everything documented, it's going to be a disaster. I can't have them learn with my $100,000.
So where should they be at if they're new by the time they come to a Heartland?
Well, this is in my book, but
okay.
I paid, I think, $27,000 for my first education, right? Rich dad, poor dad. They're not in business anymore. Yeah. And the most valuable thing I learned was join your local RIA. So it's a real estate investment association. Most bigger markets have them. And ours here locally is ACRE. There used to be two, but ACRE is the RIA, they call them, in Pittsburgh. I met most of my contractors, most of the wholesalers, most of the realtors, bankers through that group. Go there. It's like $150 for the whole year. So if you're starting out, go join ACRE. Like there's no question in my mind that's where you should start. There's other groups outside of that, but that's the best place to start, I think.
Okay. That's where you want to get all your education, everything you need.
Yeah, and they have people come in and talk.
Okay.
Experts in certain areas, and you'll learn that way. It's very cheap education, and they're really passionate about helping people get into the game. And that's, I don't know that I would have, I might have muscled my way through, but they certainly provided a great community for me to get started and meet the people that I do business with today.
Okay. Now I always hear people say taking out loans, should you use your own savings to invest, or is it best to get loan money or do the HELOC or do something else? Is it okay? How is it looked upon as dipping into your savings and using that for your firm?
Well, everyone's situation's different.
Okay.
You can't run yourself down to zero. One of the underwriting criteria that I have is they got to show me they have 15 to 20 grand in the bank, because I want them to be liquid. I don't want to put them in a bad position. You will be in a bad position because you got to pay closing costs up front. We'll fund 100%, but we charge a couple points, a processing fee. You've got to have some thousands to put in. It might be 5 grand, but you're putting that up front, right? On top of that, we reimburse on the rehab. This is important for most people to know. We will fund 100% of the renovations, but you fix it up and then we reimburse, because I got to make sure the value's in the property. I'm not giving you money to do it. You're fixing it up, and then I'm reimbursing you as soon as you send me proof that it's done. Because I have to make sure I have an obligation to protect my capital and my investors' capital to make sure that value has increased at least that level of what you put in. So we analyze the scope of work before you start the project to make sure it's aligned.
Okay.
And then you do it, and we have an app that we do virtual inspections with, that you show proof that those scope of work line items are complete, and then we reimburse you within a day or two.
Oh, okay.
So back to your question about should you use savings. It's okay, but I'm a big fan of not depleting all of your savings. I think borrow as much money as you can and use your savings to fund the renovations and then get reimbursed, right?
Yeah.
You need liquidity. Most of the people that end up getting into trouble and deals dragging on too long is because they don't have any savings. They get gummed up because they ran out of cash. And it's a shame, you know. I've helped a couple investors that were newer. It's not like the rules of business would say that you know I should have just taken the property back. But I have a couple investors that I helped, gave them extra loans to get them funded because they were on the right path. It just they just screwed up their money, to be honest.
Okay.
So yeah, don't protect your liquidity and use it because there will be a rainy day out there.
Okay.
You know, a project, you will go over budget. I've been over budget on most of my projects. So,
and you gave like a roundabout, like maybe like 15, you said 20 or 10?
15 to 20 is
Okay.
honestly, yeah. If you have less than that, you need to wholesale and build your cash up.
Okay.
So wholesaling
Yeah,
is getting a property under contract, selling it to a guy a guy or girl that has money that will buy that from you, and you make a spread on it, right? So if you buy it at 50, or if you have it under contract at 50, you find someone that'll buy it at 60 or 70,000, as long as the deal makes sense, right?
Right.
You have to get it way under market value to leave enough profit for that investor to take it off of you. But if you make 10, 20 grand, boom, you know, like you're ready.
Right.
But you've got to build up some cash. You know, I hear all these people say, you can do real estate with no money. You can, but it's hard. So I always advocate shoot for that 15 to 20 grand as just a starting point. You want more than that, but like you really shouldn't do a flip without that much money in the bank.
Okay. And say if they get denied a loan with you, can they come back at a later time?
Yeah, of course.
Okay.
And I give brutal feedback, and I've had people. And I said I'm like, I don't know if I should send this because like no bank's going to give the feedback that I give.
Yeah.
Hey, you're paying too much for this, or this renovation's way over your skis. You know, and not everyone's going to love that, but you know, I'm honestly trying to give them my lessons in as little time as I can. That's why I wrote the book, right? I get invited to coffee all the time. I can't do coffee with everyone. So I wrote the book to give everything away as far as how to find capital. Because the two biggest things that stop people from starting, I can't find deals. And I'm not the best person to find. I mean, I could probably write a book on that, but I'm not the best person to teach that. But finding capital is usually a 1A, 1B, right? And that's why I wrote that, because I can't talk to everyone, but I want to help people. So that's what's in my brain. You're never going to get from a cup of coffee or a lunch as much information as I give away in the book.
And what started you to write a book? What happened with that? How did that come about, you writing a book?
Again, a lot of the invites to coffee was a thing, and I feel bad turning people down, but like I have to run a 30-person company.
Yeah.
But no, part of one of the masterminds I was in, a lot of them were writing books. I think it's a great business card, right? Like, so I didn't know you had a book, actually, but I gave you another one. I signed it, and
Thank you.
I think it's a good business card, right? You know, it's a differentiator. I think it will help. It helps me connect with people. Because most people won't take the time to do it, right? So I did not do it to make money. I probably I lost money on it, but it's not that. Again, to me, it's a business card. It's a way for me to give information to people, you know, for like less than $10, right?
Right.
I think it's just a good way to share what I've learned, because I think a lot of people can benefit from it, because it's not a well-known, it's not well-known information, right?
Right.
It took a lot of deals. I mean, we've before last week's sale, I mean, we owned over $50 million in real estate. So we've learned a lot of lessons. And I'm happy to share what I've learned. I just need to do it in an efficient way, and that was my way to do it.
And it seems like 2023 was a good year for you. You had the book, and then you had the 600 plus units in 2023. And then you was on some, different platforms.
Yeah.
Seems like that was a busy year for your
That
career.
was, that was, in my group, in that mastermind group, I'll say this. I think it's important for people to share their journey, right? I tell people, don't keep your journey a secret. And I see a lot of counter arguments to that. Hey, keep it a secret until you.
Yeah.
I have raised over $15 million from friends and family and just people that know me because I share stuff on social media, right? So I haven't done a lot of podcasts lately, but I did make it a thing because it sharing your story attracts the right people to you, right? So I think it's important to not hide your journey, document it, share it, because you will find people that are like, I want to support you, and not necessarily support you, but I want to get on that train with you. Like I had one of our settlement companies, the owner sponsored the Down Syndrome Association. My youngest daughter has Down syndrome. I was involved in the charity golf outing. He sponsored and rode with me in the golf cart, and he saw the deals I was doing. Also, I was active on social media. So he said, hey, I've lent to people before. I'd be happy to fund one of your deals if you need to. And we still do business today because of that. He wouldn't know if I didn't share that information. So I think it's important. And I know not everyone's comfortable speaking in public or sharing the story, but it's a lot easier if people know what you're doing. Like, I think it's, I don't know why more people don't do it.
I know. Me too. I feel the same way. And you have mentioned about somebody helping you out. You had like a donor, well, I guess that private lender, right?
Huh?
Can you talk a little bit about private lender? Was that considered a private?
Yeah, he was a private lender, and like I mentioned, my first boss that made me go out in my little Honda Civic hatchback. He was my first investor. He's still invests with me today, and now he's my chief operating officer and business partner.
Oh, okay.
So you never know what it can develop into, right? But yeah, private. I mean, we have, I think, over 50 private lenders, and a lot of people say, "Oh, what's your minimum?" I've taken people with 13 grand, 10 grand, and some of them have turned into over $100,000.
Yeah.
Like it's pretty cool because we've kind of become an asset class for some of our friends and family to invest in, right? It's a big responsibility, and I don't know. It's something I'm pretty proud of that we're able to give people in all different situations. Like we had one guy that one of our neighbors invest with us. Unfortunately, he passed away. And his wife, inherited his IRA. Now we give her, she's retired, and now we give her stable income. I mean, that's a pretty good feeling.
Can you explain IRA too? I know you mentioned that in your book.
Sure. So one thing I learned a long time ago is, we all work at places, and if we're lucky enough, we have a 401k or an IRA, which is an individual retirement account. I strongly suggest people invest in that, because if they don't, they won't ever invest. Like, it's a good thing to just get money scraped out of your account or out of your paycheck and invest, because eventually you'll have something. If you don't do that, typically people find a way to spend that money. When you leave a company, you can actually self-direct it. And a lot of people don't understand this. You're not withdrawing the money. You can go to a custodian, and it's called a self-directed IRA. So when I left the logistics world, I rolled all of that into a self-directed IRA, and then I flipped a house with that, which you can do. It's a pain in the butt, and I wouldn't suggest it. So I lend with my IRA. My wife has also left her corporate career and built up a pretty good nest egg. We invest that in real estate as well. So again, we don't withdraw it. It's at a custodian, and we do a direction of investment. They invest it on our behalf, but it's completely legal. It's been done since the late 70s. Just most people don't know about it, because a lot of financial advisors don't get paid commission on that, obviously. So you can wholesale in it. You can do it You can do individual retirement accounts. You can also do, I don't think it's Coverdale IRA, but it's for education.
Okay. Oh, okay.
My daughter has a self-directed IRA, you know what I mean? So it's a powerful tool, but IRAs are very important and a great way to diversify, your eventual retirement.
Oh, okay. And then you talked too about your book. I'll just bring up some of the things real quick. Lease option.
Yeah.
You talked about those. Okay.
So lease options are a way to, some people, I like creative financing. So owner financing is, I really like you want to try to get the deed. Like there's a hierarchy of ways to get owner financing. You want to get the deed, meaning that the person you're buying it from will be the lender. So you're not paying them up front. So we bought, the first owner finance I got was in Allentown, and I gave him $10,000 down and bought it. The rest, it was a $65,000 transaction. I paid him $550 a month for 100 months, 0 interest. Okay, so he was the first lien holder on the property. Gave him $10,000 at closing. I paid the closing costs, and I paid him $550 a month. Now it was rented at that time, I think for $800 or $850, but all that money, all that $550 was going straight to principal. Now you can also do it with interest as well. So below that, to me, in my hierarchy of beneficial ways of funding a deal, is a lease option. So sometimes people won't give you the deed. They don't want to do that. So there's land contracts and other different ways to do it, but lease option is a great way to do it. So they will give you a lease. It will need to be less. You'll have to negotiate it to be less than what you could rent it for because you need cash flow. Any seller who will owner finance a deal understands you have to make some money. So if it's rented for $1,000, they might lease it to you for $600 or $700. It's probably all the cash flow they were getting anyway, right?
Right.
So they'll lease it to you, and you have an option that you want to record. There's legal things that you need to do. You need to file or record a memorandum of option so that your interest in that property is protected. But you will agree on a price, and you have X amount of years to exercise that option. So you lease the property, but you have an option on it. So I've bought properties that way, but I've also sold properties that way. And it's a powerful tool that you can do. So if they won't owner finance it or give you a land contract, you want to go to a lease option. It's a great way to exit properties too. If you have a property that's not necessarily rent ready, you could actually lease it to someone that is handy and give them an option to buy it, because a lot of people don't have the credit right now, or whatever the case may be. They may have money, so you can take an option consideration. Ours was typically $3,000 to $10,000. They would pay you that to lock in their option price for that property, and then they have the right, not the obligation, to buy that property based on the terms that you outline. When you're exiting those, if they don't exercise that option, you could do it again to someone else. If they move out, I've had 2 people that we've lease optioned. One bought their property, and I got a big hug, and she was crying because her dream was to own a home. That was a pretty cool experience. The other one, they ended up, breaking up. The couple broke up, and they didn't exercise the option. So I could have done it again. I opted to sell the property just on the market, but it's a good tool to have in the belt.
Is that good for a starter? Somebody starting off, kind of? Is that?
Yeah, I think it's a good way to start if you don't have a lot of cash, right? Obviously, you want to own and have the deed, and there's legal, as I mentioned before, there's legal ways you have to protect yourself.
That's why they get an attorney.
Yes, absolutely, because you don't want the owner to go lean that property up, because if you exercise your option, they may have too much debt on it to where you can't even buy it. They can't even sell it to you legally. So you got to understand what the debt is on the property. So I would do a title search, get an attorney to facilitate that transaction. Okay. It's a great exit strategy if you have properties that are not pristine, right? It's a great exit strategy. It wouldn't be my first way to buy a property.
Oh, Okay. Is that, and I guess too, people do those things to put on your portfolio to build up that, right? Is that something you can put on that portfolio to kind of build up your experience and?
Yeah.
Okay.
Yeah.
All right. Okay.
You know, one of my mentors told me you have to be a transaction engineer.
Mm-hmm.
So you need to figure out what people need and figure out which one of these tools can help get
Yeah.
you that asset. Lease options just a tool in the belt.
Okay.
Some people use that as their primary exit strategy.
Mm-hmm.
I know one of my friends and investors, that's what he does for all of his exits. Instead of just purely renting them, he lease options them to people that want to buy the house that can't buy the house right now.
Okay.
Okay, they can't get a loan. What does that do from a beneficial standpoint for you as the property owner?
Mm-hmm.
Is typically when you lease option something out, like you can put all the maintenance and repairs on that tenant buyer.
Yeah.
So you don't have that risk. It's a more pure form of cash flow because you don't have that risk of maintenance and repair.
Oh, okay. Okay. So there's a lot out there for people to know. And why should people do hard lending?
Hard money lending?
Yeah, why should they do that?
Why should they borrow it?
Why should they do that with you? Like, why, or anybody, why should they do hard money lending?
So, well, you can lend hard money or you could borrow it.
Borrow.
Why would they borrow?
Mm-hmm.
Well, number one, you will run out of cash, 100%.
Okay.
If you're doing more than one project, you're gonna run out of cash eventually. So we are a great outlet for people to borrow money quickly, fund their deals, and keep moving because speed is important. I always like to differentiate ourselves because I am not just a loan jockey giving term sheets, right? There's so many people I see on social media saying, oh, I can do this, I can do that. Like they're just giving you paper. We have, tens of millions of dollars of real estate experience. My borrowers are like, I don't want to charge people for education, right? Like I don't want to be one of those paid coaches. Maybe someday. That's not where I'm at in my life. What I want to do is party with my borrowers, right? I want to help them be successful. I want them to learn what I've learned. I want to give them a fast track to it. So when people come to us for hard money loans, they're not just getting funding. They're actually getting my experience as well because I have a personal relationship with them, and I've helped people really change their mindset on how to scale up because they're customers of mine. But so we are definitely different than most people that you can get funding from.
Why do you do what you do? Like, why do you like to give back and help? Like, what about you? Why do you do that?
It's boring otherwise. Like, I mean, I've seen millions of dollars come in the bank account. It's pretty cool to see that on a screen, right? It doesn't make you feel any different. I've accomplished things that I never thought I would. Then you move on to the next day, right? What's the next dragon to slay? But when you can help other people accomplish things that they didn't know that they could accomplish, like it just gives you better purpose. I don't know. I feel better about myself that I can help other people. And I've had so many people help me throughout my career that, my counselor in high school, heck, my mom, my dad, even though they were divorced, like they were both integral pieces, like my grandparents, like so many people, everyone. I laugh at the people that say they're self-made. No one's self-made because somebody helped you. And sometimes they can help you achieve things even from a negative standpoint, right? Like there's things that I grew up around that, I wouldn't disparage my parents, but like I knew that was not what I wanted my life to be, right? Sometimes you have to use that grit and that negative energy to say that's not going to be me, right? And it pushes you in that direction. So we all have stories that we probably don't want to share, right? So if I can help people achieve more things, that's why my company's name is Achieve. If I can help other people achieve things that they didn't really think they could, like what's better than that? So I don't know. I just get a sense of fulfillment when I can help other people do things that they weren't real sure how to do. But when they have that grit, when they have that drive, like that pushes me to want to help them. I don't know. That's just the way I'm built, I guess.
And I was going to ask, like, what keeps you grounded, but Is that part of it? I guess seeing, like, what keeps you, what do you have, like a faith or something that keeps you kind of grounded in all this? And
So I do have faith, and that's I'm a work in progress there because like I didn't grow up in the church by any stretch. I always felt uncomfortable. We actually go to a church now that I do feel comfortable, and Nicole, my wife, has helped me. My daughters have helped me on the faith approach. What keeps me grounded? Man, I just don't come from much. I don't need that much to be. I mean, I took the girls. We go to a football game. I took them through my old neighborhood, like the house I lived in is boarded up, and what else do I need? You know what I mean?
Yeah.
I just I've done some really cool stuff. I've been on a private jet. I've been to London. I've been to Dublin. I've been in the islands. Like I've done some really cool stuff. I love all of that. Trust me.
Right.
But like at the end of the day, the best thing is whenever I walk in the door and hear Stephanie say, "Hi, Daddy." Like I don't know. I just don't need much. That people connection is more important to me than stuff because I've bought some really cool stuff. The stuff doesn't do it for me. Besides fast cars, I love fast cars, so that's my guilty pleasure.
Yeah, I think Nicole had a Mustang or something.
We have
faster than
Nicole
that,
has a Mustang.
Yeah, she has a Mustang. Yeah.
And I upgraded my Mustang this year, so it's we've got a little faster vehicle now. And Stephanie loves it. So
Stacey loves it too.
Yep, she comes in the car with me. She asks me to go on rides, and she sings. She has the worst singing voice in the world, but she loves it. And we sing together, and that is my disconnect from work. Because if I'm not doing something fun, like I'm working, she helps separate me. But my family keeps me grounded. Like my whole goal in life is not to get kicked out of the house. So sometimes it's a tough audience.
What would you like the viewers to take away from today?
I think the biggest thing that I would love people to take away is try stuff that you're not sure if you can succeed at. Find out what your ceiling is, right? Push and do things that the people in your circle would say, "Oh, you could never do that," right? Find out. Most people are capable of way more than they know. And again, that's why our company name is Achieve, and that's why my tagline is No Finish Line, right? I just believe in really going after it and trying to do things that maybe even you didn't think you could do. So I hope that inspires someone.
Yeah. And then again, for my podcast, since it's called Seeking Wisdom Through Real Estate, what's a piece of wisdom that you would like to give our viewers?
Wisdom. I would say the biggest thing is, and I don't know how I can teach this, but really understand values in real estate. Like scour whatever you have access to, the MLS, Zillow, especially if you have a lot of real estate agents, like there's a lot of real estate agents that don't know values, right? Like understand values, because if you know that, you can really back your way into finding out if something's going to work or not. But you have to know the value. I see so many people be too optimistic. So I guess my wisdom would be, be conservative on your values, but really learn how to value properties and what the value adders are and what the value detractors are.
Okay. Thank you.
Thank you.
And how can people get a hold of you?
I would say the best part is either through our website, which is acplens.com, or Facebook is the platform I'm most active on. You can find me at, I think it's at Dan Costantino. But Facebook is probably my second best way to get a hold of me.
Okay. And also please go out and get Dan's book, Keys to the Vault. Where's it sold at?
Amazon.
Amazon.
Yep.
On Amazon. It's a good book. You see I have my little Post-it, so yeah.
That's a lot of Post-its.
Yeah, so it's a really good book. So please go purchase that from Dan. And so if you enjoyed your time with us, please like and subscribe to my channel. See you next week when we seek more wisdom through real estate. God bless.